is a text that I got from one of our listeners. Texted to me. This was a live text. He said, "Hi, John. I've been working with Mark the last couple of days, and it looks like he's going to save me over $900 a month." That's pretty neat, right?
That's pretty neat. You can do a lot with $900 a month.
You do a lot with $900 a month, but Mark Livingstone with us, Cornerstone First Financial, founding sponsor of the John Fredericks Show. Let's first talk about, in your business now, impeachment is over. Mm-hmm. Just your compatriots, your colleagues in the finance business, what are they saying about Trump, about the economy, about impeachment? The guys and gals that you talk to, what are they saying?
I mean, I think I've told you before, this is considered a golden era where for the first time since World War II, interest rates and unemployment are below 4%. Mm-hmm. The Trump economy is booming. We are seeing interest rates down, home appreciation back up. We're seeing just the housing market take off. There's lower inventory, so that's pushing values up. So people that bought their home and then had decreased values are now seeing the values come back so that they can eliminate their PMI, take money out, use their home as a virtual ATM, and it's all because the economy is doing so well, John. This Trump economy is just trugging along. Housing and jobs are what drive the economy, and both are going full bore, right now. The Fed wants to keep inflation in check right at 2%, and they have postured that there's going to be no more increases in interest rates for the entire year. So what we're seeing right now is the rates have been artificially pushed down due to the coronavirus.
Really?
Yes, absolutely. They are back to levels we haven't seen in over 3 years.
The coronavirus?
The coronavirus.
Pushed down the levels.
Has pushed down the interest rates.
Why?
Because of fear in the market. Okay.
No kidding.
Yeah, absolutely. So Q4 of last year, we saw the tariffs and trade wars pushing the rates down. Then those kind of went away because obviously we worked out something with China. So all of a sudden we see the rates start to go back up. And now in the last 3 weeks, we've seen the rates come back down to record levels. Rate levels that I have never seen in the 26 years that I've been doing mortgages. It is go time. It is, if you are in the market to either buy a house, refinance, now is the time to do it. I just saw, while I was waiting outside here to come into the studio, breaking news that applications have hit an 11-year high for mortgages right now. And that's because people are recognizing that right now is the time.
Okay, but can you lock in an interest rate? I mean, it's like you're saying artificially low now. So if I get one at 9 or 3.85 or something, can I lock that in, or does it go up when interest rates go up?
No, we lock you in, and we have a free float down at Cornerstone. But that's beside the point. What I'm saying is that interest rates right now are at 3.49, and that's for a conventional loan, a Fannie Mae or Freddie Mac loan. Those veterans that are listening, the government loans are down at 3%. So VA loans, 3% on a 30-year fixed, 0 points. FHA, 3%, 0 points.
So you're better off buying than renting.
Exactly. Yeah. Where'd you hear that?
You.
Yeah, there you go. Correct. For the first time, it is cheaper to have a mortgage than it is to rent due to the, there's a bunch of no and low down payment options as well as the low interest rates. It's 30% cheaper right now to own than it is to rent.
So even though like a lot of people say, let's not buy anymore because you can't take the mortgage deduction off your taxes if you're not itemizing, if you're just doing the straight one, even without the deduction, it's still you're still better off buying.
Correct, absolutely. And the other thing that we're seeing a lot of is with the tax plan that you just mentioned, you can no longer deduct your home equity line of credit unless it was used to purchase the home or do home improvement. So we're seeing a ton of people, John, call in to consolidate their home equity line of credit into their first mortgage, especially because right now the rates are so low on the 30-year fixed and home equity line of credits, those rates are adjustable. They're floating. So they can go up or down based on whatever the prime rate is doing. So it does make sense to consolidate that. And the gentleman who you just read the text from, our good friend, mutual friend John, who's listening right now, John called in and he's like, hey, I want to do this and this. And so we were able to discern from his credit that it didn't make sense to do what he wanted to do due to the credit score. However, what we did was we got him in an FHA loan consolidated his first and second mortgage. Again, he called in. That wasn't his intention, but after walking him through it, he saw, wow, with this option Mark is proposing, I'll save $870 a month, whereas with the option John wanted, he was only saving a couple hundred. So call us. We will go through your specific situation
and try to get the best plan.
Because we're not only just mortgage originators, we're mortgage advisors.
So our listener John called you up on my advice, and you're saving him $900 a month cash.
$900 a month.
Money.
Yeah.
Cash money.
Yeah. That's like me showing up at your doorstep, ringing the doorbell, and handing you $900. Are you going to shut the door on me?
It's exactly in the same house. Everything is the same. You just pay $900 less.
Right. Exactly.
And you get the same thing.
Yep.
Right? And I mean, why? I mean, it's a no-brainer.
Exactly.
So you got to call Mark Livingstone today. Mark, number, what is it?
202-625-1221. That's 202-625-1221, or on our website, which is cornerstonefirst.com. And I believe Doug is in the office right now. We're going to have other loan officers in later. But here's the downside, John, is that people are more confident now, which is a good thing. However, they're spending more. So consumer debt has reached an all-time high. Consumer debt right now is up at $14 trillion, which is an all-time high. However, the bright side of that is that because tappable home equity is also at an all-time high, people can take that debt and refinance it into their mortgage, take some of that money out of the house that is now appreciated. So there's not as many units for sale right now. So those units that are for sale are actually pushing values up. So that if you bought your house 2, 3, 4 years ago and you didn't put down 20% and you have that monthly PMI, do yourself a favor and call, because there's a very good chance in the John Fredericks listening area that your home has appreciated so that you now can eliminate that PMI. We're seeing areas in Richmond, Chesapeake, we're seeing Newport News where values have gone up, and those people that are paying the monthly PMI can now refinance. Great thing. The VA rates, like I said, 3%. You can go cash out to 100% of your home and pay off some of that debt. It's just a no-brainer.
No-brainer right now. This is the golden age of housing. If you're thinking about doing a refi, now's the time to do it. You're going to save money. Our friend John saved $900 a month, sent me a text on it, which I forwarded to Mark Livingstone, 202-625-1221, 202-625-1221. Look, it doesn't matter what your status is. You're going to save money when rates have come down to 3%, and you're going to save a lot of money. Plus, you want to get rid of that PMI, private mortgage insurance. I mean, that's just like taking money and throwing it down the toilet. Who needs that?
That's right.
And that adds up. That's gone. And look, if you're a veteran, one thing about Mark Livingstone and his team at Cornerstone First, they're the experts on all veteran. It doesn't matter. Doesn't matter what comes down the pike. They're all over it. They're going to be sure, as he said, he's an advisor. They're going to be sure to advise you to get the right package that's going to save you the most money. 202-625-1221. Go to cornerstonefirst.com, cornerstonefirst.com. Now, some people say, well, mortgages rates are low, but housing prices are being pushed up because there's not enough housing available to meet the demand. Therefore, I'll get a lower rate, but I'm going to be overpaying for a house. How do you respond to that?
Well, because there's not a lot of homes, like you said, it's pushing values up. You're not paying for more for a home. Your home is going to continue to appreciate even if you buy it. I mean, it's just a known fact that homes that are primary residences and owned versus rented appreciate faster than rental units. So you now are going to get the tax deductibility. You now are going to have a home that you are investing in that's going to continue to appreciate. You have something that's your own. I respond to that by all means, it makes more sense to own than it does to rent. We're seeing a lot more millennials get off the sideline. They say that the millennials are going to be the fastest group of homeowners moving very quickly in the near future.
But it was the exact opposite, because millennials were the ones that saying, we don't want to buy, we want to rent, we don't want to pay the interest, we want to be more mobile, come and go different cities, different areas. So it was the millennials that were the rent generation.
Correct, living in mom's basement,
so to speak.
Right. Okay. So, they're coming off the sidelines. The numbers don't lie. Here come the millennials. And what is it saying? With a rising tide, all boats with a, how's it go?
A rising tide
lifts all boats. And so what we're seeing now is the millennials are coming in, probably because there's a lot more knowledge about it. Like I was saying in one of my spots about how now it's 30% cheaper to own than it is to rent. The millennials are hearing that. They're learning that, hey, I can get into a home with 3 or 3.5% down. And that, it's so odd to me. A lot of them didn't realize that they could have that option. They thought you had to put 20% down. So now by educating these millennials to get off the sidelines, a lot of them are coming in. They've saved money. 3% is not a lot. On a $300,000 house, you can get into a house for $9,000.
No way.
Yeah. A $300,000 home, you put down 3%.
Don't you have to be a veteran or something?
No. You're putting down 3%. The veteran can get in with zero money down.
So I could get into a house right now if I wanted to. There was so in Washington, D.C., which I rent, right? I went to this place right next door, 2 doors down. There was a house renovated. Ann and I actually looked at it because, we're paying rent here, this studio, 2 doors down. And I went in there. The guy wanted $750. I'm like, no, we're not doing that. He says, well, we could probably do 6. That was like the fastest $150,000 drop draws I've ever seen. We could probably do 6 if we do it fast. This is just owned by an equity trust. We just got to get rid of it. So are you saying that for $18,000 I could have gotten in that?
Yes, that is what I'm saying.
I should have done that.
And when I was standing outside on your balcony waiting to get into the studio this morning, this is for your listeners. We're on Capitol Hill right now. I heard the Star Spangled Banner. There was an orchestra playing the Star Spangled Banner within a few blocks. What is that? That was incredible. I felt so patriotic this morning waiting for John to open the door to the studio as I stood outside and I heard the Star Spangled Banner. What a great country we live in.
That's a group of Trump supporters who came to D.C. and they played that on the grounds of the Capitol, which is only 6 blocks from where you are. They came here, and that's an open ground. They set their band up. They came in a charter bus. They came early in front of the Capitol to play the Star Spangled Banner, celebrating Trump's acquittal.
Isn't that incredible?
That's pretty
And I was
neat.
part of that, to hear that this morning. It's like I live downtown, and when I run on the mall, I'm like, how many people can say they run up the steps of the U.S. Capitol and then down the mall to around the Washington Monument and then back home? And it's just, wow, what an honor to live in this great city or in this great country. So did you know that your listening area, kind of a pivot here, has the 3rd most military listeners in the entire country?
No.
Yes, absolutely true. So we know that you have tons of veterans listening right now. So going back to the VA loan, thank you for what you do, and please give us a call, because right now the John Fredericks listening area that covers all of Virginia has the 3rd most military personnel in the entire country, behind what?
What?
Southern California and Florida.
Well, Florida, obviously, Pensacola, and then Southern California because of the San Diego base.
Right. And then the John Fredericks listening area.
Right.
I don't know if you knew that. That's pretty cool.
I did. Thank you.
Yeah,
Thank you
you're
for
welcome.
telling me that.
And thank you to those veterans and active military. And so for you, we encourage you for VA loans. Again, it's 3%. You can go to 100% cash out. This is a great, great time to live in this country. You know, my friend Jay, our mutual friend,
Jay,
says that what's playing out right now.
You got to go to dinner again.
Yes. What's playing out right now with politics is like watching a reality TV show. Okay? And he's like, that's all it is. It's a reality TV show that we're all part of. And I got to say, owning a mortgage company, Cornerstone First Financial, is like a reality TV show, because you never know what's coming next. It's the coronavirus that's pushing rates down now to levels that I've never seen. It's consumer debt at an all-time high. It's tappable home equity at an all-time high. It's different programs coming out. We can now do bank statements programs again that we couldn't do for years. So whatever it is, Cornerstone First Financial is a lender and a broker. What that means to listeners is that we have our own warehouse line, so we can approve loans. We can take your call, say, hey, we're going to give this guy a loan, and that's Cornerstone's money that's letting you borrow it. That's how I can say I can meet or beat any other company. However, if your situation doesn't fit our portfolio, we also are a mortgage broker. So you get the best of both worlds by calling Cornerstone, because if your loan fits within our scenario, 640 credit score or higher, Fannie Mae loan, then we'll get you the lowest rate. And even if it doesn't fit our portfolio, you have challenge credit, you've had a bankruptcy in the past, you need to go to 90% cash out and you're not a veteran, call us and then we'll broker that loan and still give you the guarantee that will meet any of our competitors. Pretty exciting stuff, right?
I mean, if you have got to call Mark Livingstone, 202-625-1221, 202-625-1221, or you can go to cornerstonefirst.com. That's cornerstonefirst.com. You can save a lot of money, just like our friend John did, $900 a month. If you're thinking about buying that house, buy it now. Kara says, yes, the problem with millennials, though, is we're still broke. So sounds like you need to call Kara, get her out of renting, and get her into her house there in Richmond. Got some pretty good deals, Kara. Got some pretty good deals. Plus, you just got a raise from us. So now it's time to buy and lock yourself in the Richmond. Mark's going to give you a call. 888-480-5646 is our number. Go to cornerstonefirst.com.